So I've been trading using ICT concepts for over 3 years now, but lately I've been incorporating some order flow. I feel like market conditions have been kind of tough, and I'm always just trying to improve as a trader. So I've been using things like bookmap, volume profiles, and today I'm going to talk about the exact way I've been incorporating volume profiles into my trading, coming from someone who has like an ICT background. Like I'm very familiar with ICT concepts, and that's like the way I think. So if you're the same way, I feel like I'm going to be able to explain volume profiles pretty well. So let's just hop over the charts. So I'll just pull that up. So I have the Nasdaq pulled up. So before we actually look at the charts, I want to explain some like concepts, right? Because I'm going to explain exactly what like a volume profile is, like straight from the start, right? So I'm sure you understand what a fair value gap is coming into this video, right? I mean, if not, I'm going to give you a 5-second rundown. So let's say this is candle 1. I don't need to extend this right. You got like a wick on the bottom. Got like a wick on the top. So here's candle 1. Then I'll just draw candle 2 real quick. And then we'll draw candle 3. Now the important thing is there's going to be a gap. If we look at candle 2, to the left and to the right, there's an area where there's just a gap, right? It's a fair value gap. So the concept behind this is, right, it's an imbalance in price where price was not distributed between buyers and sellers equally. So in many cases, even if we're moving like in bullish structure, right, at some point we're going to be due to mitigate some like imbalance, right? And that'll send us up higher when the buyers that weren't able to get in originally down here can finally get their orders filled, right? That's the concept behind a gap. And obviously, like the way we think about how gaps hold is the candle bodies should hold this gap, but the wicks are able to go through it. Volume profiles are a little different than this, but it's kind of the same concept, right? So if you're familiar with like a volume indicator that goes like on the bottom, right? That's volume over time. But instead, what a volume profile is, it's volume by price. So the way I typically draw these is I start from the open of the session. Well, not session, I'm sorry, the open of the daily candle, right? The open of the day, right? So as we know, the market's going to close at like 16:59 Eastern Standard Time, which is essentially like 5 p.m. Eastern Standard Time, and then it's going to reopen at 6, right? There's that hour it's closed from. So at that 6 p.m. open, which is 1800 UTC minus 4, like Eastern Standard Time, there's that new candle opens. I start drawing the volume profile from there onward. So you can see my beautiful drawings in the right here. But so you got to think when there's areas of low volume on the volume profile, like here for example, right? This is an area of low volume. That's similar to a fair value gap because all this is telling you is from the open until now, over this range, where was the most volume traded at? And I just like that, like, I feel like the idea behind fair value gaps is we're trying to pinpoint where an imbalance in the market is, right? But just because there's a fair value gap there doesn't necessarily mean there has to be an imbalance. But if we're looking at volume profiles, we're like defining, hey, there's a logical reason besides us estimating upon candlestick charts, right? Like fair value gap is an estimation, but volume profile uses volume, which is undeniable, right? So how do these low volume nodes work, right? So let's extend this box right so you can see. I do have a better example using a trade I'm going to show later in the video, but so let's say after this gap gets formed, let's say theoretically, if we did come back and down and trade into it, we're moving bullish order flow, pull down into this, buyers should step in and push us up in theory, right? It's not like every single time you're going to see a low volume node get created. It's not like it's magically going to hold. Same thing with the fair value gap, right? Fair value gaps fail every single day. It's more about having the right narrative, picking the right ones, aligning them with your bias, right? But think of it like literally like a low volume node is a fair value gap. And high volume nodes just talk about areas where price was traded the most. So there are some other things about this volume profile I should explain. I know I went straight into low volume nodes because like that's the way I think as an ICT trader. But there are also some pretty important concepts I just totally missed out on here. So there's 3 points that it's going to mark out for you. once you load up this volume profile. So I'm just going to double click on this. The one I'm using, because I don't want to sit here and draw the volume profile manually every time I come to the session. So I go to indicators, and then you can search AAVP, which stands for auto anchored volume profile. So what it's going to do is it's automatically going to anchor based on the settings. I mean, I'll just show you my settings real quick. I mean, I just have period auto. So the row size by default, I forget exactly what it comes to by default, but you're definitely going to want to change this to 200. And for value area, you're going to want to leave that, I put it at 70. I think by default, it might come to 68. I just put mine at 70. So, it's marking out this one line over here, which I know it's kind of hard to see with my chart background, but, there's like this little gray line right over here, right? Obviously I could change the color of that if I wanted. I can actually just do it right here. See the point of control, because that line is just the POC, which stands for point of control. It's pretty much the area in which the most amount of volume was traded. So typically when price comes to the point of control, I feel like it can do a lot of things, which I know isn't really a good answer. But I mean, a lot of times it can consolidate at the point of control. It can also retest the point of control. Like it can break through it, retest it, and go the opposite way. But obviously, like, just do your back testing. Like, I've only been using volume profiles for like a couple months, so I'm not like claiming to be an expert. The best way to get information, especially based on your strategy, is do back testing. But there's two other things that these volume profiles are going to mark out. Oh, and I don't think I finished saying that. You can just change the color right here. So if I wanted to make it yellow, I wanted to make it this color, I can do that to make it, let me see it easier. But I'll mess with the colors later. For some reason, I honestly thought I'd change the colors. Maybe I forgot to save it. But so the VAL and the VAH, that's going to stand for value area low and value area high. So essentially, when you came over to this inputs tab, it asks you what's the value area volume. So it's saying like of the total volume traded, let's say 70% of it was in one range. The top of that range is going to be the value area high, which is drawn right here on this chart. I'll just use like a blue line to mark it out so you can see it clearly. So this, I'll put some text on here, value area high, value area low, and the point of control is up here. So that's essentially saying in between value area low, value area high, that's where 70% of the volume has been traded. So it's a good gauge for like where price has been trading before. And I know you might look at this chart and be like, oh, well, there was so much trading going on down here. How come like the point of control doesn't incorporate any of that? The reason for that is I'm looking at Nasdaq, right? The Nasdaq is a stock exchange. So the most volume for the whole day is going to start after the 9:30 market open, because technically the market is not open for this whole period right here. There's like Asia session, London session, and then there's New York session because the Nasdaq is based on the US dollar, right? It's literally a New York stock exchange it's traded on. That's why the volume's all up here. So yeah, I guess, I'm trying to think. I'm going to show you a trade example. I'm trying to think if there's anything else I left out. I know some people use like the value area from like the previous day. There's nothing wrong with doing that. They even use like previous week's value area low and high. But me personally, I'm really not trying to give myself analysis paralysis. So I've just been marking it from the start of the current session, right? Or the start of the current day, I should say. It's essentially the start of the new daily candle. That's when you start forming a new daily candle. But yeah, so I'm gonna go over to TradeZella, and I'm gonna show you guys an example of a trade I took where I aligned fair value gaps and low volume nodes. So this line right here, I'm pretty sure, yeah, it's the point of control. So again, I've used a volume profile like I showed you guys on TradingView. I'm just in replay mode in TradeZella. This looks a little different if you're wondering, but so we're pretty much trading toward the bottom of the value area low, but leading up to this trade, right, I knew we were delivering from an hourly fair value gap, right? So I can draw out this hourly gap. Just gotta find my rectangle tool, right? Hourly gap over here. We've traded into this hourly gap, reacting out of it, and also we even hit equilibrium of this wick. So you can see after we wicked up on the hourly, Just gonna grab my Gann box real quick. I'm sorry, I usually have this stuff bookmarked. That's why it's taking me longer to find it. Here it is, Gann box. So also, I think this Gann box is probably gonna look funky because I don't have it configured. But essentially, 50% of this wick is right here, right? So that's equilibrium of the wick. I know some people think like, well, they look at like equilibrium of wicks. I think it's pretty valid in certain cases. So in today's case, right, we're reacting off equilibrium of this wick. But me personally, there's no, in this range right here, right? So let me get rid of this volume on the bottom. I don't look at volume by time. But I'll just grab my little arrow tool. So in this range right here, right, there's no 5-minute gap since market open. There's no 15-minute gap. And I know we're delivering from like this 15-minute gap to the left. But me personally, I would have preferred if internally we were also delivering from some form of gap, right? We're almost like sweeping these lows internally, which are essentially meaningless, right? So, I saw we started reacting up right here, which is below 10 a.m. open, right? Because I was looking for longs today. I had a bullish bias on this day and time. So I was looking for longs below 10 a.m. open. It's like the start of like a new 4-hour candle. Here's 10 a.m. open. So I saw we pushed down and we started pushing up. And me personally, I didn't like these longs over here. Right over here. I didn't feel comfortable enough taking them just because like what are we delivering from? But I also had this volume profile, right? So I was like, you know what? We technically are reacting out of this area of low volume, right? It's a low volume node, it's called, right? I mean, the strongest area of this low volume node is down here. So you can see like we came into that at open, right? We came pretty close to retesting it at where I was considering my entry. But the last thing that really convinced me that I should really take this trade was you can see even like this whole area as I extend it up, it's technically all still a low volume node. It's just the extreme was down there. So I saw we even came down and retested this low volume node one more time. So I'll replay price a little bit. So now, right, I have this low volume node drawn. We are retesting this low volume node one more time. We are below 10 a.m. open again. And also, you guys heard me say that I use Bookmap a little bit. So at this point in time, there were some orders on Bookmap that we were retesting. So keeping all this in mind, right, I know there's resting buy orders I can see on Bookmap using the heat map given to me there, right? So there's pending buy orders down here. We're delivering from a low volume node. We're also delivering from an hourly fair value gap. I have a higher time frame bullish bias. I mean, you can see by this hourly chart, right? We're just ripping up. And on top of that, we also had low resistance liquidity above that needed to get ran. So essentially, like I think stacked highs, they typically just get ran, right? It's a bunch of like stacked stop loss orders, right? All these stacked highs up here. So I entered pretty much, I'm pretty sure it was the candle close right here. Oh no, it was right here. That's where it was. So I saw this candle close right here, and we almost retested those areas I saw, the area of orders I saw, like the pending buy orders on Bookmap. So we're wicking down at this area, wicking off the low volume node, low resistance liquidity above, which is a strong draw. We're below 10 a.m. open. Just a lot of things going in my favor. So I can just play out this trade a little bit more. You can see how it played out. I'm not going to lie. I did get pretty scared when I saw we dropped like this. And I was not break even just yet. I was waiting for like some of these highs up here to get taken for me to go break even. So we pushed up. And actually, so I know this kind of sounds kind of funny. I forgot I was trading an eval that had 40% consistency, and I was a little risk heavier than normal, slight amount. So I was planning on selling at these highs up here, and then holding for the rest of this low resistance liquidity, which is up here. But I ended up full closing because of consistency. But there is the recording of me on stream literally taking this. So, I mean, if you guys go over to the live section of my YouTube, I have the recordings for me trading like every single day for the past like 6 months at this point. So I took this trade Wednesday, May 6th. So go to the recording of Wednesday, May 6th. You can see me take this trade in live time if you want to get more info on it. I entered this position at 10:24, and there is a clock in the bottom left of my streams, similar to this one, so you can scrub through the recording and figure out when I entered and hear my analysis in live time. I think it's pretty cool. But yeah, and then I would have sold up there and then sold the rest at the end of these like low resistance stacked highs, right? And you can see we ended up stalling a little bit, right? You can see we're delivering up good in the second we take all these kind of stacked highs up here. I can't remember. Honestly, I think I might have drawn up till here. Yeah, no, my bad. I think I looked too quick. I did draw it up the way till there. But if I wasn't under a consistency rule, I would have partialed half and just kept trailing stop. And most likely, I probably actually would have gotten stopped out because it's coming back to me now. I remember I was trailing stops mentally, and I saw that it edged this high up here, but never really took it. And then even though I know it looks like it took it, but I don't think it took it. But I think it would have stopped me out somewhere in here from my recollection. But would have been a good trade regardless. So that's pretty much an example of how I aligned low volume nodes and fair value gaps and like ICT concepts and all that. So I mean, if you guys have any questions, definitely leave them down below. I'll try my best to answer them. You can join my free Discord, ask questions in there as well. And like I just mentioned before, I do live trade every single morning, Monday through Friday at 9:30 a.m. Eastern Standard Time. So definitely pull up, hang out with me, see me take literally every single trade in live time, ask me any questions every single morning, Monday through Friday. And also, if you guys are looking for prop firm to trade with, I personally like Alpha Futures and Tradeify. Discount code TIMB272 is also going to give you the best current discount at both firms. I think Alpha has the best live conditions. They have like an actual trading floor in London. And then Tradeify has options like daily payouts, straight to funded accounts. So definitely check out both firms. But I do appreciate you watching this all the way through. If you found some value, I'd really appreciate it if you could hit that like button down below, subscribe, and also leave a comment with your thoughts. But I hope you have an amazing rest of your day, and best of luck with your trading. Peace out.